Ladies and gentlemen, we have a huge video. Some major updates from Donald Trump and the Middle East conflict. What a lot of people have pointed out over this weekend, that oil prices actually going up could be a positive catalyst for Tesla. And yeah, I agree. There's also some rumors circulating that Tesla's largest competitor, BYD, is actually pretty close to being insolvent. I will share the details with you and break down the numbers. And unfortunately for BYD, it may just be a matter of time. Although, keep in mind, we're talking about China. We don't get audits out of China, so these numbers are based on what they say. The numbers actually could be a lot worse than the numbers that we have. I'll tell you now, I know they're not better. So the question is, how much worse is the business than we actually know? This is important because other than BYD, I mean, no other company is really able to produce a profitable EV. And even then, a lot of BYD's profitable EVs are hybrid vehicles. So imagine a scenario where BYD did start to go under. It's not going to be much in terms of competition for Tesla. Beyond that, I will share my perspective on markets this week and what I think is coming next for Tesla stock. And that might surprise you. In fact, I know it's going to surprise you because I'm actually pretty bullish for this upcoming week. And I'll tell you why in this video. Ladies and gentlemen, we have a lot to get into. Hit that like button and subscribe to the channel if you have not done so already, and let's get started. So let's start this video off with an update on this Middle East situation. This is the most pressing issue for markets as of now. I've said this from day one though. It's not about the war. It's not about conflict. Like, Wall Street could care less if people are dying. That's the harsh reality. That's not what moves markets. People ask me why I didn't cover the Congress people that, were over this weekend. It's because markets don't care. They're not going to react to that. As horrible as all of these things are, Wall Street's not going to react to it. The only reason Wall Street cares about Israel's conflict, war, if we will call it that, is the implications for energy. So Wall Street only cares about energy because imagine if gas were to fall to $1 a gallon. People are going to have a lot more money to spend. The economy is going to be a lot stronger. Just based on that alone, you could probably add like 1% to GDP or more. Okay, not to mention the FedEx, UPSs of the world, the Amazons, the, Uber drivers, like DoorDashers, every other business that is very dependent on energy prices, like cruise line, just you name it. Everything is influenced by oil, one shape, form, or another. No matter if you are a 9-to-5 commuter, or you work for a company, or you own the company, okay? You are influenced by energy prices. That is why Wall Street cares about this conflict. There is some positive developments on that front today. Donald Trump says we will have peace soon between Israel and Iran. It does seem like there has been some kind of communication between Trump and Israel and Trump and Iran. Trump did say over this weekend that he was getting many calls from Iranian officials on this conflict. The Israeli military spokesperson says our goal in Iran is to remove the capabilities of this regime to annihilate us. This is a very positive headline for the most part. Israeli military spokesperson says the goal of our operation in Iran is not regime change. What that means is they don't actually want a larger war. Okay? Because a larger war would mean regime change. Basically, what that means is they don't want to kill the leader or invade the country. That's essentially what they're talking about. And I'm sure if Israel wanted to take out the leader of Iran, they probably could have done so in the first round of strikes, right? They basically got everyone else. So this is actually a very positive headline from that perspective. And again, tie this back to energy with some of these positive headlines coming out that should have some positive implications for energy, for oil. Now, over this weekend, you did have a lawmaker basically throw into question whether Iran should keep the Strait of Hormuz open, and that is the thing that ultimately matters. This is the flow of oil tankers through the Strait of Hormuz. It's just a little oil choke point right there on southern Iran and the UAE, okay, and Oman, right? Iran, if they really wanted to, could block this at least temporarily. That would cause a much larger issue. I mean, look how much of the world's oil supply flows through here. 20 to 30% of the daily oil supply flows through the Strait of Hormuz. Okay, that would be a huge, massive, colossal issue. It looks like we're getting further away from a larger oil disruption. So that seems positive over this weekend, even though there's been a lot of missiles hitting each country and death and destruction. From an oil perspective, it does look like some of these comments coming out here midday Sunday look positive. Russia's Dmitriev says that Russia can play a key role in mediating the Iran-Israel conflict. So again, seems a little de-escalatory. But not all comments were good. Okay, this one doesn't sound as good. Donald Trump says the U.S. may get involved, or it's possible that the U.S. could get involved in the Iran-Israel conflict. I think that's kind of what everyone already knew, though. Like, that's always a possibility, especially, again, if Iran tried to cut off the Strait of Hormuz. We would be involved within hours, not days, weeks, months, any of that. Within hours or minutes, potentially, we would be involved in that. So I think we kind of already knew this, but it sounds a little different hearing the president actually say it. And before these comments, the comments that I've previously just shared with you, Trump says that numerous conversations and discussions occurring regarding Iran and Israel, I think probably on both sides, they're, having conversations with Trump. I think Iran wants to stop getting attacked, and I think Israel wants some guarantees from the U.S. Israel probably wants to get some kind of nuclear deal, because you have to remember what a nuclear deal really is inspectors that basically live in Iran, right? That monitor Iran and make sure they are not developing a nuclear weapon. It's pretty hard to develop a nuclear weapon discreetly to a certain extent. Even like if you know about the Manhattan Project, the first nuclear project in America. Yes, it was a well-kept secret, but there was a whole facility dedicated to it. Like, if you can't really get around, hundreds of inspectors that basically live in the country. Okay, I think that's ultimately what they want, and I know that's ultimately what Trump wants. So it seems like we're heading in that direction, and let's see if the conflict ends sooner rather than later. And again, Trump says that many calls and meetings are now taking place. And as someone commented here, they say when Trump says calls are happening, something big is coming. He says that Iran and Israel should make a deal. So again, just to wrap up the Middle East segment of this video, it looks like things are heading in a more positive, constructive direction. Although there's still conflict, and there may be conflict for a while, the implications for energy seem to be relaxing a bit. And judging off of what we know right now, I would imagine that energy prices probably come down coming on Monday, and stocks get boosted based on these headlines. Now, if Donald Trump is to be believed, then there will be peace coming soon, and that's definitely going to be a positive catalyst Because really, I think at the end of the day, Donald Trump doesn't want energy prices to skyrocket. That's what it comes down to. From a financial perspective, from an economic or political perspective, energy is like having your kahunas, just like they got Trump by the kahunas here, right? You can only do so much. If you escalate this conflict, like, imagine going to the gas station right now and gas is $10 a gallon. Not a lot of people, people are going to be mad at Trump, mad at, people want someone to blame. If it was Biden, they would blame Biden. If it happens under Trump, they're going to blame Trump. From a political perspective, you got him by the kahunas a bit. You got to try to de-escalate the situation. Again, from an economical perspective, you'd probably go into a recession if that lasted for any meaningful amount of time, even a couple of weeks. That would be very recessionary. Yeah, sure, you'd get cuts from the Fed, but you're also going to have a lot of people in a bad financial situation. That's not a good political objective. Again, considering midterms are what, like 9 months from now, something like that. I don't keep up with politics like you guys would think I do, just what affects markets. But I know midterms come up, in the not so distant future. And yeah, that would definitely not look good. Again, wrapping this up from a financial perspective, it's in the United States' best interest to de-escalate the situation. I think that's what Trump's trying to do today. And I don't think it's a huge shocker that he's doing it here on Sunday, and markets are probably going to react positively to this coming tomorrow. Now, getting into this BYD situation here briefly, there's been some talks over this weekend about BYD potentially being in a much worse financial situation than most people think. Even when you cite a lot of, Wall Street guys, a lot of analysts, when you ask them who's the biggest problem for Tesla, who's Tesla's biggest competition, who could eat Tesla's lunch in the EV market, they're all going to say BYD. BYD has made a larger presence in Europe over the past year or two as well, and that has definitely eaten to some degree into Tesla's market share. Now, over in China, Tesla has continued to do just fine, and I think China just really has a much weaker economy than most people think. But when you look at some of the actual numbers and accusations, I shall say, on BYD, there is definitely an issue within that company. Now, here's the deal, just to save you guys some time. I know there was like a 25-minute long video that was put out over this weekend. I'm sure you've seen it, about BYD's troubles. But here's the gist of it. BYD is delaying payments to suppliers. They're basically, instead of using some form of like bank credit to extend, duration of between the point of when they get stuff to when they actually have to pay the bills, they're doing this with suppliers, which is fine if you're growing. Imagine it like this. Imagine like you own a company, okay? Or someone owes you money, and say they owe you $10,000, okay? And you keep doing business with them, they keep paying, but they still owe you $10,000. But let's say, they pay you $20,000, and then they owe you $11,000. They pay you $30,000, and they keep doing business, right? This is business transactions. And then they owe you $13,000, and then they pay you $40,000, and then they owe you $15,000, and then they pay you $50,000, and then they owe you, $17,000. Okay, the amount that person owes you continues to grow, but you're not necessarily dissatisfied because you're doing a lot more business with that person, right? That's the best way to think about the situation. So while the overall debt number grows, you're doing more business with them. In other words, BYD, is accumulating more debt with their suppliers, but they're doing more business with their suppliers. So the suppliers are like, hey, I don't want to make a fuss about this debt because we're doing a lot more business with you because BYD has been growing a lot. But eventually that turns into a problem. When does that turn into a problem? When the growth slows down. When instead of getting $50,000 a day or whatever a week from that person that owes you money, now you're getting $20,000 or $15,000 or even $30,000. Then you start to look at that overall debt number and say, hey, you got to start paying back this debt, right? That is like a pyramid scheme that cannot work long term. Long term, that will fail miserably. Now, if you look at BYD's debt to asset ratio, and again, these are just numbers that we have from BYD. So like, it's probably worse than this. In fact, I know it's probably worse than this. It's not better. We'll tell you that because Chinese companies do not get audited. That's the whole situation a couple years ago where Chinese stocks were threatened to be delisted. They don't get audited. China doesn't let U.S. auditors audit their companies. You just got to go off their word, essentially. So debt to asset ratio, 74.64%, in totally different leagues compared to Tesla. Just for an example, Tesla's total debt to total assets last quarter was 10.5%. So BYD's is 7 times worse than Tesla's. Okay, much worse situation for BYD. Their net debt is 323 billion won. Okay. That equals 45.02 billion US dollars with a total market cap of $147.77 billion. Now, BYD has $21.1 billion of cash on hand. So they have 2 times as much debt than they have cash. Versus Tesla. Tesla has $7.53 billion in debt, but Tesla has $37 billion in cash. So Tesla has 5 times more cash than total debt. Tesla could pay off all of their debt and still have roughly $30 billion in cash. You know, how did nobody figure this out from a Wall Street perspective until now? And they still aren't talking about this yet, but I'm sure we're going to cross that bridge soon. Like, even to try to compare BYD to Tesla seems asinine at this point. Okay, because BYD is getting to the point of the law of large numbers. It's going to be harder and harder for BYD to grow at 100% growth rates. Some of the crazy numbers that they've been able to, put out. Once that growth slows down, that's when you have a problem. Debt's not a problem until growth slows. That's when debt becomes a major issue. And I know there's a lot of even retail investors that have kind of gotten brainwashed by, mainstream Wall Street guys that have talked about BYD being an issue for Tesla. It looks like, from my perspective, this thing ends in BYD bankruptcy. But again, who knows how long that takes or what happens in the meantime. But from an EV perspective, I don't think Tesla's going to have much competition in a couple years from now. The fact of the matter is, whether it's Lucid, Rivian, or any other company, they're, I don't know if they'll ever produce a profitable EV. If there's any company that probably will, it's probably like Toyota, someone that is just a manufacturing behemoth. Although GM is getting closer to actually making profitable EVs. Ford's still a long way off, so we'll see. Now, I do believe personally over the next 6 months or so, Wall Street's going to care a lot less about the EV business. of Tesla, meaning Tesla stock is going to react a lot less to those delivery numbers that come out on the, Monday after a quarter ends. We're going to start to care less about that as the robotaxi begins to roll out more on June 22nd, as Tesla cars start to deliver themselves to people's houses on roughly June 28th. And as we get further progress and innovation on Optimus, with hopefully deployments of Optimus in warehouse-like settings coming next year. I think the next 6 months are going to be categorized by a little bit of AI euphoria. And I think 2026 is going to be big time AI euphoria. I wouldn't call it a bubble. Trying to predict when a bubble is going to happen is pretty much impossible. But I think you're going to have a lot of AI euphoria. And I think Tesla could be one of the epicenters of it. Now, I also want to point out what a lot of people have talked about over this weekend that I didn't talk about enough is the rise in energy prices that could actually be a positive catalyst for Tesla. Again, when you go to the gas station and look at gas in the next couple of days, and it's going to go up. Okay, I don't know what the national average is, but here in Michigan, it's like in poor areas, it's like $2.94. In more middle income, upper income areas, it's like $3.20 a gallon. Yeah, it's stupid how they price gas, but anywhere in that range, you're probably going to creep up closer to the $4 range in middle income, higher income neighborhoods, and probably, closer to like $3.40 in lower income areas. That's not crazy. If this conflict were to get worse, or there were to be larger impacts to the energy market, and gas were to go to, $4 and above, that really puts EVs on more people's radar. More people are going to look at EVs and say, wow, yeah, if gas prices are going to be high, people think gas prices are going to just stay high forever. That's mentality. Maybe that does get more people to look at EVs. And I could definitely see that being a positive catalyst or event for Tesla. We'll see if the stock takes it as such, though. And part of the reason I didn't talk about this much over this weekend is because it's really hard to quantify, say, if gas, went to $5+ a gallon. Like, sure, that's obviously going to be positive from an EV perspective. There's going to be more people looking at EVs, inquiring about EVs just to save money on gas. But the knockoff effects of that, are not great. Like FedEx or UPS or other companies potentially laying people off, recessionary dynamics. I don't know if it's a net positive or net negative for Tesla if gas prices go too high. But getting a move higher in gas prices definitely could be a net positive for Tesla. And you've already seen that. Now, we are going to talk about this more in the next video, but I'm actually very optimistic for this week. And I'll tell you why in a nutshell. We have retail sales this week. We have Jerome Powell this week. Now, Wall Street expects a really bad retail sales number. This is kind of like the CPI report from last week. Wall Street was expecting CPI was going to ramp up. We were going to see more inflation. I didn't think we were going to. We didn't. Okay. We beat those CPI numbers because expectations were for, high, right? That inflation would come in high. Okay. Retail sales are expected to come in really low. And I don't think they're going to. Okay? I don't think that we're going to have a blowout number. That's not what I'm talking about here. But if everyone's super negative and it comes in not as negative, even if it is negative, that's still positive. Okay? I actually think retail sales could be in positive territory. But again, we'll talk about that in the next video. That's one reason why I'm optimistic for this week. The other reason is obviously I think it's in Trump's best interest from a, again, political perspective to get this conflict over as fast as possible. Trump says, hey, we're going to see some peace soon. I'm going to take him on face value there. We will probably see some peace soon. Okay. That's going to be a positive catalyst, most likely at some point this week. We'll see. I think starting off Monday with some of those comments, it's going to be taken as positive from markets. And then Jerome Powell. This is a little bit of a toss-up, but the Fed has been nervous, defensive, cautious, whatever word you want to use, around cutting rates. They want to stay in this wait-and-see kind of mode. But we've gotten now 2 months of CPI data since the tariffs started, and no inflation. None. Zilch. Nada from tariffs. Incredible progress on inflation. Now the Fed is in their blackout period, so they're not able to comment on the latest CPI report. But you had Fed officials, 2 weeks ago that were talking about, or even the last CPI report, that were talking about that was the last CPI report before an uptick in inflation from tariffs. We didn't see that. I think the Fed logically has to take more of a balanced approach here. Even what I would call more of a dovish approach here, and say, hey, we thought we were going to see inflation from tariffs. We may still see inflation from tariffs, but we're not seeing it yet. And if we don't see inflation from tariffs, we're going to have to cut rates a lot. Something along those lines is what I'm expecting from the Fed. In other words, much the same way as Wall Street is expecting a bad retail sales report, all of Wall Street is expecting Powell to be bearish or super neutral coming this week. I think, again, with the CPI reports, with the trade deals that are starting to get done, the Fed's going to be forced to take more of a accommodative approach and be more open to cutting rates, saying, hey, we're giving it some time, but we're just not seeing that inflation. The Fed's going to have to face the fact that we're not seeing that inflation. I don't think there's any chance in hell the Fed comes out this week and is more bearish than the markets think they're going to be. That has a 0% likelihood to me. The only likelihood, in my view, is that the Fed is more dovish than Wall Street thinks they're going to be. Just my views. Again, let me know your thoughts down below in the comment section. We'll talk about this a lot more in depth in the next video with my specific expectations. But in a nutshell, I'm actually pretty optimistic this week. I think this could be the week of new all-time highs for the S&P and a breakout rally for Tesla stock. Let me know your thoughts on this down below in the comment section. Have a great rest of your day, and I will see you in the next one.